Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is December 11, 2018, and I'm going to take a look at the 10-year notes tonight, the ETF being IEF. The reason I'm looking at this is that there's change that's in the air here. You can see that the trends, short, intermediate, and long-term, are all point to the upside because there's been a nice little surge to the market, but the technical rating has turned sort of neutral, and there's nothing that's really showing up here as far as being overbought or oversold yet, but there are a couple of signs here in that the pro alerts, the little patterns we have, that kind of dictate whether or not the market is going to continue or reverse or whatever the case may be. And so we just today had a surge high that triggered again in the 10-year notes, and that's telling us that the market has gotten ahead of itself and that there's a little bit of profit taking to be made. And then when it comes to the other alerts, we also have on a weekly bar basis, this having just recently triggered a flow high. Again, two separate profit-taking opportunities, and this bodes well for where the market is and the fact that the market's gotten ahead of itself. So here's a weekly chart. You can see that the surge has been underway here with these bars here, the weekly bars, that it's gotten a little ahead of itself. And so from the trend perspective, that there's opportunity to unwind certain positions, at least lower some of your position size. You can see that there's just recently been an elastic level overbought condition on the weeklies, not necessarily on the dailies, but on the weeklies. If we come to the daily bars, you can see no doubt that there's been a nice little trend to the upside. And this is what I'm going to show here, is that there's this breakout above this particular resistance level. When we broke above that, traditionally when you get a breakout, for those that are kind of new to trading, when you get a breakout to the upside, you usually have a little bit of a surge. It breaks above that resistance level, it penetrates, it goes above it, and then it starts to retrace. And we're in that retracement level. And right now we're literally at support, and if we don't hold here, then obviously you'd expect the market to start to sell off. Here is the overbought condition that occurred yesterday, but not necessarily today, and you'd expect the market to maybe have a little bit of a retracement. And the fact that it's been able to penetrate this resistance level, that's a good thing. I mean, it took a little while to do it. You can see some excess volatility, but you'd expect maybe the market to reverse a little bit. Now our systems, so just coming back to the website, we just, with yesterday's action, we had a short position that did trigger to offset and hedge our long positions. Got a long daily, a long 240-minute system that had been open for a while, and then the short position, which triggered yesterday, that's going to offset some of that retracement. So it's not a perfect hedge. We're not necessarily net short, but we are hedging our position at least a little bit when it comes to the 10-year notes. Now, on a longer term perspective, what we have is the depth gauge, and the depth gauge has been in a bear trend for quite some time, and we've only just recently, really, with this major surge we've had here, finally gotten the market to start to head a little bit higher here. We'll see whether or not there's going to be any type of follow through here with this breakout to at least as far as that breakout from that resistance level, and we'll see as whether or not the markets are going to be able to really hold here and really start to surge higher. Now, I would expect a little bit of a retracement, so longer term I'd expect an upside, but on a short-term basis, and this might be hard to see because of the scaling, and the scaling has to be done for all the different markets, and the 10-year notes just don't move all that much, but here is basically mid-December, and what you're looking at is a little bit of a sell-off until maybe the last week of December, and then there'd be a little bit of a surge for the remainder of the year, and certainly a bit of follow-through in the early part of January. So when it comes to a seasonal, whether it's a 5, a 10, or a 15 year, there's typically a little bit of a sell-off and then a surge, and we're in that little bit of a sell-off phase. So what this means, just coming back to the chart here, I would expect some type of retracement here, as we've had with the breakout. We'll probably have maybe perhaps a little bit of a sell-off into it, and then during the course of the next week or so, continued sell-off. But then thereafter, the remainder of the year, and obviously we're at December 11th right now, I would expect there'd be, in the next week or so, a little bit of retracement, and then we'd have another surge that would follow through until mid-January or so. That's what the seasonals basically show, and the key will be watching how we penetrate to the downside with this, or do we actually hold here. Now with the systems, as I pointed out, we've already begun to hedge ourselves. There could be more hedging and get ourselves into a perfect hedge. Again, I'll come back to the website for this. When we look at this, that we have some nice little long positions per contract, trend-based, pattern-based. Trend-based and pattern-based. We have another trend-based that is starting to trigger, at least on a short-term basis, the 90-minute bar system. So you can see that the systems are going through their normal process where we look for a breakout. The markets have allowed ourselves to establish some long positions with some of our longer term systems, daily and 240-minute bar systems. And then we start to look to protect ourselves. So we're in that protective mode with the support to the market right now, and the fact that there's perhaps a little bearish bias to the market based on the seasonal tendencies. But don't confuse this with the longer term. In the longer term, looking at the depth gauge, which is more positive, and the seasonal tendencies, which will be more positive once we get past the next week, maybe 10 days or so. So with that being the case, let's see how the systems kind of react here, where we're able to either unwind some of our long positions on this 240-minute, probably the most reasonable culprit to unwind itself, or look at some of the other shorter term systems to add to our short-sided and actually protect ourselves. So we're at this point right now, just jumping back to this. If we can hold above this 120 and 14 and a half ticks, then we'll look at this as an opportunity to actually hold above there. But if we're not able to stabilize and really stay above that, then I would expect, again, that little reversal. So that is the key right there, that particular support resistance level. And looking at the long term, which is more bullish, and the short term, which is more bearish, and the hedging that's going to be going on with the systems. This is all part of the fun of systematic trading. Constantly looking at different time frames. When there's a time to be bullish, there's a time to hedge, and there's a time to be more bearish. And now we're starting to look at the conditions that are out there and looking to go more into protective mode until we can see how things kind of play out here with this support level. So with that, we will take a look at another market tomorrow. Thanks so much. Bye-bye.